Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Wednesday, August the 8th. And we did get our continuation rally from our big day on Friday and on Monday as well. We had a non-voting Fed member speaking about how he would be encouraged for more QE. Really doesn't mean hold any validity to the to what he's saying. He's a non-voting Fed member. But again, markets like to continue like the good news of what they're seeing. Fed Bernanke actually didn't say anything about QE as well, and markets are actually continued. We rallied, if you remember, we rallied on the Draghi comments 2 weeks ago, and he did not do anything. The Fed did not introduce any more QE, and we're still up at these levels. So, as you can see, good job on the Fed keeping these markets elevated, which is a concern to me. But nonetheless, we have to trade what we see, and we have to be really diligent and prepared for any reversal, because we're at these levels right now that markets can actually really move on any kind of news event. We are at elevated levels at the moment. We hit a 1407 high in the S&P cash yesterday. And like I mentioned a couple of weeks ago, we are overbought, but that does not mean the markets cannot go higher. So we need to be on the lookout for a reversal. That doesn't mean that we can't trade on the long side as well. There are a lot of good long setups I looked at last night and that I'm seeing. I still love the coal sector, the energy as well. But energy is elevated, and we need to really understand that, saying if we're going to take a position as a swing trader, we want to take a little core position, maybe a quarter position of your book, and just average in as the market's coming. Now, if the market does pull back, which I do anticipate a pullback at some time, whether it be just a small consolidation for one more move higher, or a decent-sized pullback, 2, 3, 4%, and then we could start looking to build position. But at this time, where the market is, it's really not prudent to be looking to establish new long positions here. Other than day trades, of course, we could be day trading long all day and every day. But establishing a position, taking a core position right now at these levels is not prudent at this time. But look, the market's looking okay. If we just had a big pullback here or a decent pullback, I would be much more aggressive to the long side, looking to build some positions, but not at these levels, like I mentioned. But we are in a presidential year, as you know, and we are vulnerable to any kind of pullbacks, especially going into the fall season. Seasonality, we are in a weak time. Doesn't look that way. Obviously, the news trumps the charts, and the Fed can manipulate anything it wants to do. So let's just keep that in mind, guys, okay? We're going to roll into the charts now, and as you can see here on the 10-minute, I always like to introduce that just to kind of give you a handle on where we are. We are trading at these levels here. We're at 140 in the spiders. Again, no volume. We are in the summer trading month, so to be expected, but we're having average lower volume than we should be having. So that's still not a real good sign. We've creeped up all the way up in these areas with no volume at all. We are extremely complacent. I'll show that to you in the put call. But the markets are extremely complacent, which is also a warning sign as well. And we still have this market divergence that we've been talking about. It hasn't acted yet, and necessarily doesn't have to. But we just want you to understand where we are here, that the market does reverse, and reverse hard. We don't want to get anybody caught on the wrong side. And as well as, building positions right now is not the right time. But here's our NASI, right? We'll go into our little NASDAQ summation next. We've had a sell-off in the summation next, and now we're just curling up. Today, another run-up would be a good would confirm this a buy signal. Otherwise, this thing would just hook up and then sell off again. Now, we've been up 4 days in a row, and this rally from the June 4th low is 10 weeks old. So this is very very cautious on these notes here that I want to point out. So please use caution here when you're swing trading. Okay, look at our NYMO, and again, our NYMO is right here, been basing around negative 20, plus 20, and that doesn't mean now doesn't mean we can't go higher or we can't go lower, but we're really neutral right now in the NYMO, the McClellan oscillator. So just a word of caution. The SPX 50 continues to grind higher, and we're up at these nosebleeds areas I kept mentioning. So again, another word of caution. I would be looking to use caution here. Same thing here with the 200-day. Now, the one thing about the 200-day S&P stocks above the 200 moving average. Now, if you see here, which I didn't draw the line, I'll do that tomorrow. We kind of broke out of this little wedge pattern here, this ascending triangle. If you look at it here, and then here, collected dots, lower, high, higher, low, higher, low. We're breaking out of this area. So can it move up to this lofty area here? Sure. But we are overboard. But we did have a breakout. Just something, a word of caution that I would be looking for. Here is our put-call ratio. As you can see, the market continues, the put-call, this indicator continues to make lower lows, lower highs, which is bullish for the market. Okay, so now we're here in this wedge pattern. So we have this, if we take these lines all the way down, bring this down here, we're at the bottom of this wedge. This is a bullish fallen wedge, so it's a bullish indicator. If this put-call starts to break up, then we could see a little more selling as well. Of course, along with the other indicators that have to do the same. Now, the dollar has been under pressure in the last couple of weeks. We broke the 20, broke the 50, and now we're going to be back at this area here at the 81, let's just call it 81.25, 81.20 area. If the dollar, keep an eye on this dollar, because as you can see here, we're basically wedging. And if the dollar does, again, break out, guys, that's when we're going to have continued selling. But right now, believe it or not, the charts are looking better and are improving. So it is a good sign. If we just had a pullback here, it wouldn't be so bad that we can get into some long trades. A little more swing trading instead of day trading. But I'm just using a little bit more caution here. I don't like the way the markets are at these levels. Actually, for swing trading to establish new longs. Okay. Back up again here. Look, you can see 1407. We hit a high of 1407. We did pull back. We broke above this long-term resistance line. Now we could easily move up to the 1422, 1424 area easily. I mean, we're only 15 points away or so, 20 points away. So just keep an eye. As you can see here, we're trending higher in our MACDs. Stochastics again up in this area here. And if the longer it stays in its consolidation area here, give or take, 1390, 1410. It's basically markets are resting, so we can move higher from here. Please don't rule that out. And I wouldn't just throw on a short just to be short the market here. Okay, so just kind of use caution here. Intraday shorts, fine, sure. Spiders, just to give you an idea with volume. Look at the volume. Volume has we took off. We had this down day 1, 2, 3, 4. We had, and look at the volume has tapered off since this move up. Now, again, volume has really been non-existent since the crash of 2009, but you still have volume bars that are still acting as some sort of indicator, obviously, and volume is still important. So whether it be lesser volume than it was in 2005, 6, and 7, we still can gauge volume by what we have in past history. And as you can see here, volume has tapered off all the way up, and we have these two hesitation candles, and even though we're running up, we're at the end of these Bollinger Bands. If you see the orange, we're at the end of this Bollinger Band here, so I would be using extreme caution, and I would be looking for some sort of a pullback in the next couple of days. At least a couple of days. We'll see. All right, IYT, the transportation sector, still in a symmetrical triangle pattern, head and shoulders in between with the neckline down here. So we're still in here, and this is still concerning to me. I mean, we're rallying. The S&P is rallying, the Dow Jones is rallying, but our leaders are not rallying. Now, again, it could pick up. As you can see here, MACDs are trying to cross over the signal line, constructive. We're making higher highs, high lows on the histograms, and we are rolling back up into our stochastics. This can play catch-up, and this is this uptrend line I've been looking at since early July. So we really want to see how this reacts. Okay, and taking a look at the IWMs. The IWMs did break that line, same thing with the July, and we did break out a symmetrical triangle, but we put in a doji star. Now, I do like the volume here. Look at the volume, did break out on that, but we basically closed on our lows, not really too good. So I want to see this now continue today, and maybe we can get up to this 81, 82 area, and then reevaluate where we are with the markets. Semis. Now, the semis are acted really well the last 4 or 5 days. Now, they are... this is constructive for the bulls because you want to see the semiconductor, risk on sentiment. You want to see that moving higher. If in fact, again, we got some sort of a little bit of an indecision candle. If we start to break the lows here and start to head back down, not that it's not constructive, it's fine, but then it's just going to kind of warrant the fact what we're talking about, maybe a little bit of a pullback here. Now, this is the Q's Big Cap Tech really played catch up, and as you can see, look what happened. We broke outside of the Bollinger Bands here. Now, this is good. This is actually overextended, and we're looking for some sort of a pullback again in the Qs. But you can see here, breaking out of this Bollinger Band, we had a big run up, 4 days, 4-day run. So I would expect, and coming into congestion here, if you look at the backside, these volume profiles, heavy volume up in this area, that means heavy resistance. So I don't see this thing much going much more higher. I mean, it could tag 80, 67, 68, of course. And we could be overboard for many, many days. So just keep that in mind when we're trading. You're looking for swings. I still, I'm an advocate of putting on hedges up in here if you're long, if you're swinging long term. So I at least for now buy some protection. They're cheap. Puts cheap right now, so I would be looking to do that just until we get this unwind. If we can pull back and we can just pull back on low volume into some heavy support area, then I'd say the market can be bought. But again, we're coming into this September, October, which the election year, and even more so with election year, you're going to get more of some selling because people are undecisive. They're going to clean their book up before the election comes. All right, so listen, have a great day today. Use caution. Remember, guys, cash is a position, and I'd always keep your stops in place here. Manage your trades appropriately, and a few good trades, especially in the summer months. We don't have to overtrade. A few good trades in a week could get you paid. Okay. Have a great day. We'll talk to you tomorrow. Take care.